Futures and forex trading contain substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer.
Hello traders, Kevin from chartspots.com. Hope you're all doing well. Today I want to have a look at one of my favorite trading setups. It tends to happen quite often in different forms. It's a easy one to follow and easy to spot. So let's have a look at the charts. We will start with a daily chart showing a bit of context to see where we are generally, where we are going, what's happening, just to have this as a background when trying to spot these trading setups that present themselves. So let's start with a daily chart. This is the ES daily chart, and what we can see here is for the past couple of weeks we have been in an uptrend. We're seeing some signs here that are not very positive, as we're having like 1, 2, 3 and 4 open gaps to the upside, so it's might get a bit stretched. However, until further notice, we are still in an uptrend. We were a bit range bound for a couple of weeks here, and we're breaking out. So that's the main context here is obviously an uptrend going on for some time. Now let's have a look at the intraday chart. So what you're seeing here is the ES chart, but including the extended trading hours. So it's a full 24-hour chart. The yellow lines you see here and here is basically the initial balance, so the high and low set during the first hour. And similarly, this was the session from yesterday, also showing the initial balance. So this means that the other part of the chart is basically the overnight session. So what I will do now is enable one of the other indicators. So this is the initial balance indicator that you're seeing, which you can download from the site. And I've only enabled the initial balance right here. There's plenty of other levels you can activate here in the time configuration. Mind you, this is European time frame for the ES, but it corresponds with the regular trading hours. So next I will enable the gaps and untested levels indicator, which can also be downloaded from the website. What levels will we be tracking during the same time frame right here? So we're tracking the gaps compared to the prior range. So if we open above yesterday, for example, and we don't trade down to that range again, a gap remains. We're tracking the highs, the lows, and the close. And since we're using a 24-hour chart, I've also enabled this option here, which basically means when a gap is created or a high and a low or a close is tracked from a prior session, those lines will only be invalidated if they are tested during this time frame as well. So let's activate this one, and it's calculating. There it is. So what you can see here is that was the session high yesterday, which was also the initial balance. It then starts drawing a line for that high. Here it's crossed, but it's during the overnight session, so the line continues as we had that option enabled. Now the very interesting thing that happened today, and mind you, this actually happens quite often with different levels, can be overnight high, can be close, prior low, high, doesn't matter. But what happened here was the high of the early morning was exactly even to the tick, I believe, to the prior day high, or the prior session high rather. And then due to some news that was picked up by the markets, there was some selling pressure. Now, what is the trade setup? When I see this, an exact level being tested and selling starts in this case, this is what you consider a weak low, because it's exactly the same, a weak high, sorry, as it's exactly the same as the prior session. So what I'm doing then is looking for signs of weakness in that selling, which this reference is already one, or strength in buying that comes in. So the market trades down, even goes through the prior session low and another low that was formed a bit another session earlier. So you can consider the prior day's low to be weak as well, because it was like a few ticks away from the low from a couple of days before, or the day before, not sure. And what we are looking at here, one of the clues that I noticed, we'll make this a little bit bigger, delete those. So what I mean with weakness in the selling, so initially this surge down was quite strong, the range was quite good in a very limited time with some good volume behind it. However, here is the first clue of weakness in the selling. Why do I say that? Because the market starts to find some buyers here, and then another small wave of selling happens exactly from the initial balance low. So that's a sign that those sellers, similar like those ones here, are you typically not in there for the long haul. And we have to remember we're still in an uptrend. We did fill part of this open gap that was there, but it's not completely filled. And this last downdraft only lasts for a few minutes. Here again we crossed that candle high, and that's a good point to take the opposite trade. Why? Because we're looking for this reference to be taken out, and this one, because these are usually shorter time frame traders. It's a valid trade to, if you have a initial balance breakout to the downside and then looking for continuation of that break on a retest of the initial balance low or the mid or something like that. It's a valid trade, but it's a short time frame trade. But you can also go for the opposite trade in this case, because you have a weak reference up here. Now, of course, you have to keep in mind we already broke the initial balance low here. Statistically speaking, a neutral day where you break both the high and the low is in somewhere 20-30% of the days, of the sessions rather. So yeah, that's something you have to keep in mind, and it's important at that point that you watch for an opposite signal. Let's say you went long here from this point on. What you're looking for is there again strength in the selling coming in or not? And that might be a point that you close your position completely. So you can scale out when this first reference is taken out, and then you basically watch the market and see if there's a reason to close a full position or to keep hanging on to the trade. And in this case, it even went up all the way and took out that weak reference that was created early in the session, and then continued even higher as the session drew to a close. So that's basically the setup. So what does it really mean? You look at what is the broader context, and you look for references that show you that what's happening might not be what it seems, because that's what's happening right here. You have this exactness, and there is quite strong selling going on, but still you have this reference here, then you get this one as well, and then it's really a matter of just taking the opposite side and going for your scale outs and watching what the market does with your position, and keep it on as long as it doesn't show you an opposite signal. And what you have going for you in this case as well, this was selling, yet we were still firmly in an uptrend, in a breakout even from a multi-week range. So those are all things going for this trade. And there are similar setups, not only with the prior high, but I saw one here as well. Let me have a look. The 22nd, or this one. So here you have a very similar story. This one was a bit more clean. This cyan line here is the prior close, or one of the prior closes, and the high early in the morning is exactly or one tick above that level. The selling is of the weak variety, and indeed before the session closes we take out that reference. So that is basically the concept behind this. There are several levels that you can use that for. Last week, for example, there were a lot with overnight levels, but that's a topic for another video. For now, I thank you for watching, and subscribe if you like this content and want to see more of it. Check out the website. You can download these indicators for yourself for NinjaTrader, and have a great trading week. Goodbye.